Can PayPal really pull this off? PayPal might be able to pull off one of the best turnarounds in the stock market in recent memory. What do I think it's going to take for them to actually be able to pull this off? And do I think they can do it? That's what we're going to talk about in this video. And of course, we're going to talk about what I'm doing with PayPal stock toward the end of the video as well. So stick around for that. Okay, we're going to dive into all that. But first, if you're new here, I'm Austin. I'm a co-owner at cloudbusinessweek.com. I'm a stock market investor. And most importantly for this video, I'm a PayPal shareholder. Okay, if you're new and you're not one of those 2,400 or so subscribers, go ahead and click that subscribe button. Drop a like for me. And as a thank you for doing those two things, here's a picture of my beautiful animals, my two cats, Millie and Luna, and my dog, Penny. Thank you. Hope you enjoyed that. Okay. PayPal on a year-to-date basis, on a 1-year basis, and on a 5-year basis, the stock is down. Year-to-date, down 25%. 1-year basis, down 30%. 5-year basis, down 35%. Absolutely crazy. You could have bought the stock in 2018 for $85 with way less revenue, with way less operating income, with way less net income. But now, today, you can pick up the stock for $55.76. It seems like it's a screaming buy. And I'm going to talk about a few things that make it sound like a screaming buy real quick, and then a few things we need to happen in order for the stock price to actually turn around in a massive way. Before we dive into a few specific metrics for PayPal, I want to show you some S&P 500 averages. So the forward PE, meaning looking out 12 months from now, the forward price to earnings ratio of the average stock in the S&P 500 is 20.45. The average revenue growth of a company that's in the S&P 500 is 5.1%. And the average estimated earnings growth rate is right around 12% for a stock that's in the S&P 500. So it's important to keep those three in mind as we talk about those same three metrics for PayPal. PayPal right now is at a trailing 12-month PE of 16.64. So on a trailing basis, it's substantially lower than the forward basis for the average stock in the S&P 500. When we look at the forward basis, 9.81 is the forward PE for PayPal right now. That is less than half of the average stock in the S&P 500. Is PayPal a half as good company as most of the stocks in the S&P 500? I hope you know this if you're watching this video, but no, they're considerably better at a lot of things. Financial metrics say that PayPal is a stronger company than the average S&P 500 company, but it's trading at a 9.81 forward PE. So what about revenue growth? Is PayPal's revenue growth lower than that 5.1% average number of the S&P 500? Nope. Revenue growth somewhere around 8 to 9% on a regular basis and on a forward basis. So it's got more revenue growth than the average company in the S&P 500, and it has half the forward PE and a considerably lower trailing PE as the average company in the S&P 500. What about that earnings growth number of 11.2% of the S&P 500? Let's compare that to PayPal's most recent quarter on a non-GAAP basis, which strips out these one-time expenses related to these CEO and these big management changes that we'll talk about in a little bit. 20% increase as it relates to earnings. So that's nearly double the S&P 500. But remember, the forward PE is less than half. So maybe you think that balance sheet's in a terrible spot. No, the balance sheet's in a very respectable spot. So on face value, the company is screaming, please buy me. I'm the opportunity of the decade. So why hasn't the stock started to move up in a massive way? Okay, a few reasons. Number one, we've got big time management changes. New CEO, Alex Chriss, coming in from Intuit. He's bringing on a whole slew of new people to replace management team with these new, younger people that are in his sphere of influence already. Anytime a stock goes under a CEO transition, and PayPal's CEO transition has been extended for way too long. It took them way too long to find Alex Chriss, implement him as the new CEO, and get the old guard out. So unfortunately, anytime there's a CEO transition, pretty much without fail, it means short-term pain for the stock price because it means uncertainty for the future of the company. Anytime there's uncertainty, there's going to be pain in the stock price. That is certainly not the only reason though. Looking back at 2022, all the way till today, mid-2022, the net margin story started to get absolutely terrible. Net margin of 7%. 8.5%, 8.79%, and then 9.63%. Those were our quarters in 2022. Those were really bad net margin numbers for a company like PayPal. We have come out of the woods a little bit, up back to a net margin of around 13 or 14%, which is where PayPal's been at historically. Continuing to see that net margin above 13, somewhere around 13, 14, or 15 net margin. If we can hold that for multiple quarters in a row, PayPal's going to start to get some respect, because the worry was, oh my God, margins are crumbling. This stock is destined to be a dying company. They're not innovating fast enough. These legacy products that they have that are the high margin businesses are getting less traction, while their newer businesses, which are lower margin businesses, are gaining more traction. So the margin story is only going to get worse. That was the general idea around PayPal stock at the end of 2022 and the beginning of 2023. As long as they can turn that story around, a lot of investors will start to respect PayPal again. And then probably a bigger elephant in the room is that the gross margin story for about 8 quarters now, which is 2 years, the gross margin has been falling off a cliff, which is not a good thing, not what we want to see. Gross margin of 48% Q2 of 2021. And now today, we've seen steady drop all the way down to 40.20% in the most recent quarter. They've bucked that trend on operating margin and net margin because they're becoming better at controlling that spending, but for the gross margin to be dropping is not a good look. We need to see an uptick in gross margin. Even if we saw just 1 or 2 quarters of an uptick in gross margin, I would bet you anything that PayPal stock is going to start to rise in quite a substantial way. Any improvement in these margins is going to mean the turnaround is intact. If we see the net margin drop, if we see the operating margin drop, and we see the gross margin drop, or any blend of those three keep on dropping, it's not going to be good for PayPal stock price, and we're not going to be out of the woods just yet. Another thing that's supporting this idea that PayPal is a dying business and has absolutely hurt the stock price is the total active accounts have been dropping quarter after quarter after quarter after quarter, all the way down to 428 million in the most recent quarter. I think one thing that's going to help with that a lot is that Alex Chriss created the small business and financial services group inside of PayPal that Michelle Gill is now over top of. I think that could help in a major way for those total active accounts to increase and kind of get Wall Street back on PayPal's side. I honestly think a lot of the reason that PayPal has been disrespected so much is because when the management team needed to do damage control and say like, hey, these things are bad, but here's our plan to fix it, that just didn't happen. It seemed like the old CEO was just over it. He did not want to play Wall Street's game anymore. So someone young like Alex Chriss coming in and the rest of the management team that he's brought in, and of course the management team that was already there before him, some of those ones that he retained, they already did a better job of that in their first quarter together with his conference call that he had in Q3. So as long as he can do a little bit of like Tim Cook, spin the bad news into good news type deal, we're going to be in a good spot, because the truth is, revenues are at an all-time high for PayPal. Operating income is at an all-time high for PayPal. Net income numbers haven't been able to match those crazy 2021 numbers that we had whenever we were absolutely in bubble time with basically free money out there with 0% interest rates. But other than that, the fundamentals for PayPal are looking pretty dang good. Just those few things, like I said, those 3 margin metrics we were talking about, getting the active accounts up, and then just the management team being able to talk through the bad things and kind of spin them into, hey, it's not that bad because here's our plan with it. Just like Tim Cook does at Apple. He is absolutely the king at that. Look at Apple stock this year. The fundamentals of the business are getting worse and worse and worse, but the stock is still up 51, almost 52% year to date. So a little bit of that Wall Street magic from Alex Chriss is going to go a long way. I do think PayPal can pull this off. I think they're going to get these fundamentals in a better spot. I don't even think it's going to take massive improvements. I think it's going to take teeny tiny little improvements for everyone on Wall Street, all the hedge fund managers, to start to believe in PayPal again, because they're going to start to play Wall Street's game. Most important question, one of the ones that you probably wait until the end for, is what am I doing with PayPal stock? I am still buying PayPal stock. The first time I bought shares was in the high 60s. I have kept buying as the stock has kept dropping. I'm going to continue to buy throughout the rest of 2023 and probably quite a few months in 2024. I still really like PayPal pretty much anywhere under 70. If we get above 70, maybe 75, 80, I'll start to buy a little bit later, but I've been buying very consistently. I haven't been reckless or anything. It's not going to be a crazy like top 5 holding for me, but I've been buying a few shares here and there pretty much every single week, multiple months in a row now. I think PayPal is going to be able to pull off this turnaround, and I think we're going to get rewarded in a massive way. PayPal's been buying back shares like nobody's business, taking shares off the market, which is going to help those EPS numbers look even better as quarters tick on and as we exit this inflationary cycle that we've been in. I'm excited to see PayPal's future. I like this company as a turnaround play. It is not a top 5 core holding for me or anything like that, but it is a strong turnaround play in my opinion, and it's in my portfolio, and I'm going to keep adding for quite a few months to go in the future. I want to know what you're doing with PayPal in the comment section below. Let me know down there. Are you buying? Are you selling? Are you shorting? Are you staying on the sideline? Or do you think it's a dying company, or do you think this has kind of been overblown? I'm interested to hear your thoughts in the comment section below. This is a pretty controversial stock. Let's get some conversation going on down there. I appreciate you for being here. Thank you. Have a great day.